Hi everyone, welcome to today's video. So let me start today's video by showing you a clip of Vijay Kedia ji, how he invests and what he thinks about his philosophy of investment. It will get cleared if you listen to this 20-second commentary.
Actually, I do not give much importance to this ROC and ROC and all, ROE and all.
Across your investments?
Yeah.
You've never bought a stock based on these?
Yeah, based on these, I never bought any stock. It should be reasonable. You cannot get a small company, you cannot get a ROC or ROE of 20 or 25. Then stock would also be expensive. It has to be below 5, okay, or whatever parameters you are saying, it shouldn't match them.
Now you will get very scared when you listen to this commentary. You will feel that, okay, you know what, I don't need to look at ROCE, I don't need to look at ROA, I don't need to look at cash flow. Then what am I looking at when I'm purchasing a company? If you further go and analyze Vijay Kedia ji's portfolio, you will see that some of the stocks are absolutely ballistic. Ballistic in the sense that you would have a very hard time purchasing these type of stocks of companies that are not giving much cash flows, that have high debt sometimes, that can have really bad ROCE. But that is his investment philosophy. It works great for him, and I can almost guarantee you that whenever the market corrects, depending on his conviction level, he purchases more of these type of stocks. That's part A. Part B, if you analyze Saurabh Mukherjee's commentary, he talks a lot that the number one factor in terms of buying a stock or buying a company is its ROCE, return on capital employed. That's one of the foremost things that he considers, and he makes investment according to the things that he has conviction in. So what is the entire summary of this argument that I'm trying to build? The summary is very simple, that there are different types of investors who are doing really well in the stock market. On one hand, we have Vijay Kedia ji, who has been an ace investor, and we have Saurabh Mukherjee. He is also doing fairly well in the stock markets. And both of them have a very different philosophy. This is the tweet that I made regarding the same. It gained a lot of traction. In case you're not following me on Twitter, do follow it. Link is in the description box. So how does these different investment philosophies impact you as an investor, or how it should impact you as an investor? Basically, you should listen to everyone. You should listen to Saurabh Mukherjee also, you should listen to Vijay Kedia also, you should listen to Rakesh Jhunjhunwala also, and bunch of different ace investors. But at the end, it is you who is pressing the buy or sell button in the market, and you need to have conviction in whatever you are purchasing. So today, when I am sitting on 13th of December, I decided to purchase a bunch of stuff. I infused a capital of approximately 13.5 lakh, and I purchased a few things. I in fact sold also a few things, which I'll talk about on this video, and I'm going to show you the clip of me making these investments. As a bonus, towards the end of the video or somewhere in the video, I'm going to talk about which stocks am I going to purchase tomorrow, right? Why am I showing you all this? Because I have conviction in these stocks that I'm purchasing. Some of these stocks I have talked earlier on my videos, so I will be brief in terms of explaining why am I purchasing it. I'll give you links to those videos, you can check it out. But you as a retail investor, you need to develop your own conviction, because genuinely you will only make money in the stock market when you have the fundamental belief that I can go ahead and purchase stuff when my portfolio is turning red, because I believe in these stocks and I believe in my investment strategy. So with that said, let's get the video started. And also a very quick note, if you are a beginner in the stock market, one of the foremost ways of building conviction is to do theme-based investing. Theme-based investing means, for example, you believe that rural India is going to grow massively. Then you're believing in the theme of rural India, and you can purchase a small case. Similarly, I have created a few small cases according to different themes. You can check it out in the description box. All the links are there. Study these because it will help you understand theme-based investing, which is literally the first step to getting introduced to the stock market. So let's kickstart the video, and let me first and foremost talk about the stock that I sold first, because all of you keep on commenting that, hey Akshat, you just keep on purchasing stuff after stuff and you never show us what are you selling. So here is one stock that I sold today. I was already sitting at a profit of approximately 10% on this stock. The stock's name is Bosch Limited. Now Bosch is a very good stock. I have no complaints with Bosch as a company per se, or as a stock investor of Bosch. I still feel that it is a very good stock, but it is not fitting my portfolio anymore because of a few key reasons that I'm going to discuss. So let me very quickly talk about the business model of Bosch, because I have not discussed this stock on my channel. So very quick introduction about Bosch. So Bosch is a Europe-based company, and it has excellent technology and engineering prowess. So what they do is that they help companies on a range of different projects by helping them generate specialized automotive and technology oriented solutions. If you study where Bosch is making its money from, you will clearly see that it makes almost 86% of its revenues from mobility solutions, mobility engineering oriented solution. And in terms of product split, it is making approximately 74% of its revenue from fuel and injection components. This is the most important aspect of their entire business, and they hold roughly 70% of the market share in this category. So really good company, really highly specialized company, and they work on aspects around mobility solutions. They are developing EV solutions around infrastructure development and bunch of different engineering related solutions, mainly for automotive parts. Now, why did I sell the stock despite being in profit, despite having good time with that stock? According to me, a few key things have happened which will impact this stock negatively as per my understanding. So first and foremost, we are living in a high inflation environment. And if you study the balance sheet of Bosch, you will see this point more, right? So back in 2016, it had an OPM, operating profit margin of 19%. And this OPM has been constantly falling year on year. In a high inflation environment, this is going to become a big concern for a company like Bosch, despite them having a monopoly share in one product segment. Now, why is that? Let me take you to my screen and help you understand that point better. So one clear thing that is happening in the market right now is that we have definitely moved towards a high inflation. Economies around us are crumbling. For example, Pakistan witnessed a very high CPI inflation, which is consumer price inflation, which simply means that the price of everyday products have gone up. Now, some companies have the power to fight this inflation. For example, if you take a look at HUL, if you take a look at Asian Paints, right? What have they done is that they have passed on this cost, this increased inflation prices to customers. Mostly 100% price increase has been given to customers, because you need to think about it from the company's perspective also. For example, in order to manufacture one bottle of shampoo by HUL, their input cost went up. So in order to subsidize this cost, they have to pass on the cost to someone. So HUL is able to pass that on to customers. Therefore, around 2 months back, HUL increased its product prices, right? And even recently, you would have seen that HUL also is falling, right? I'm buying more, by the way. And I have purchased HUL also, and the more it falls, more I'm going to buy. Why? Because I have conviction in this stock that yes, there will be short-term pain because of increasing price rises. But a company like HUL or Asian Paints will be able to pass on these high prices to its customers and preserve its profit margins. But on the flip side, a company like Bosch deals with B2B clients. They are not dealing with everyday customers like you and me. We are retail customers. They are not dealing with us. They are dealing with big business clients, and their profit margin even before this high inflation was going low, right? And right now, if let's say they are working with, let's say hypothetically speaking, with Tata or Maruti, even Tata and Maruti are trying to cut their cost. And one of the key ways in which Tata, Maruti and all these different companies are going to cut this cost is that they will squeeze out their OEMs. So from that perspective, I feel that the profit margins of companies like Bosch will go down further. This is my hypothesis. I can be wrong, but I feel a little bit unsafe in terms of investing a lot of money in this share. So I don't have that conviction. Therefore, I'm getting out of Bosch. That is one. It's not a bad stock at all. I'm not trying to debate the point that, hey, Bosch is bad, you should also sell it. You need to act as per your understanding. Second, more important reason why I'm getting out of this stock is that right now I see a lot of amazing opportunities in the market. Therefore, I'm buying aggressively, heavily, and I'll continue to buy at least for a week now, right? Almost every day. And stay tuned on the video. I'm going to talk about 2 stocks that I'm going to purchase tomorrow. So from that perspective, because there are amazing opportunities in the market, I don't feel any specific need to stay put on a share where I've already made a little bit of money. So I'll get out of it and I will reinvest this money in a better company that I feel can grow at a much steeper pace now. Now, moving on to stock number 2. So today I purchased Divi's Lab. I was already an investor in Divi's Lab, but I have purchased greater quantities of Divi's Lab today. Why is that? So number 1, the stock has already fallen by roughly 17% from its recent high. That's one. Second, the fundamentals of the company are extremely strong. In terms of profit growth or revenue growth, there has been a consistent rise. For example, you can clearly see from 2010, every single year the revenues have gone up. Every single year the profits have also gone up proportionally, right? The profit margins are still very much intact. That is one. Second is the nature of the product that Divi's Lab actually manufactures. So Divi's Lab is an API manufacturing company and they are into the pharma space. And one key thing that I wanted to show you was around the type of product that they sell. For example, currently they are selling something called as naproxen and cough suppressant, and they have 70% market share in that sector. They are a very well diversified business. For example, geographically, you can see that they are very well diversified. They are not just dependent on India, and their product breakup is also pretty well balanced. One great thing about Divi's Lab right now is that they are not spending insane amount of money in R&D. You will say that, Akshat, this sounds like really counterintuitive. Why is it a good thing that Divi's Lab is not investing insane amount of money in R&D? Because their product line is sorted. If I actually show you the graph for naproxen, now this is a study that was done in the US about naproxen, which is one of the leading products that Divi's Lab is selling and manufacturing. You will clearly see that there is a very stable trend for naproxen consumption in the US. Right now, US population growth is not as high as that in India. So in India, naproxen consumption will keep on going up because more people are availing formal medicines. They are moving away from this very basic rudimentary type of medicines to slightly more advanced allopathic medicines, so to say. So naproxen consumption in India will keep on going up. That should not be a problem, and it is stagnated in the US and other European countries. But having said this, in US and Europe, the price of naproxen is rising. So in both the geographies, a company like Divi's Lab, whose product line is sorted, they will continue to generate stable cash flows for a foreseeable future. So in this volatile environment, I feel much more comfortable taking bets on such companies where the product line is sorted. They are not spending insane amount of money in R&D to figure out new products that they can sell in the market. They know the game. They will just go out and continue to sell the way they have been selling, right? So that to me is good, especially when the share is available at a 17% discount, because worst case scenario, the stock will come up by 17% and I will make decent amount of money within a year itself. So let me show you that R&D spent also. So if you compare it to other companies, for example, if you compare it to Cadila or if you compare it to Aurobindo Pharma, you will see that R&D as a percentage of total sales is very limited, right? So 0.75 here, Cadila is experimenting a lot. Aurobindo is also experimenting a lot. I'm not saying that Aurobindo and Cadila are bad firms, but Divi's Lab is stable. They know what they are doing. Product line sorted. We have monopoly there. Let's continue to sell it. There is absolutely no dilapidation of demand. Okay, word of the day, dilapidation. Let me know in the comment box what dilapidation means. If I can talk about stock market and English together, why not? Okay, if you want me to do a detailed analysis of Divi's Lab, I'm happy to do it. Just comment in the comment box which a few stocks you would want me to compare. I would be happy to do that for you. Now, this is me buying Divi's Lab and bunch of other stocks. So you can quickly go through this live clip so that it convinces you that I actually bought this stuff. I'm not just here preaching about these stocks. The third stock that I would like to talk with you about today is CAMS. I have spoken about it separately. I have made a separate video on this topic altogether, so you can go and check it out. But very quickly, about CAMS, the stock has fallen by roughly 32%. At that time, when I had made the video of CAMS, I was not taking entry into that stock because I was waiting for this stock to correct. Now it has corrected. I have invested my first bulk amount in this stock now, and I'm going to take even bigger positions in this stock going forward. This is very, very clear. Why? Because honestly, first and foremost, the stock is available at a super attractive price. It has been discounted by roughly 32%, which is huge fall for this stock. Now, why has the stock fallen? Now, a combination of different things. Number one, I will say this in Hindi, that AMC industry pe grahan chal rahe hain, right? So that is the first reason why the stock has fallen. The meaning of that Hindi sentence is that basically AMC industry is just going through a bad time right now, right? Will it forever go through a bad time? Absolutely not. Uska bhi time aayega and all the AMC stocks are going to make fresh highs. That is something that I'm quite convinced about, and therefore I went ahead and purchased CAMS in big amounts, and even this week I'm going to take even bigger positions on CAMS. I just want to take a look at whether the stock is consolidating at this level or not. I just want that indication. Even if it grows a little bit, I'm going to purchase even higher amounts in it. Now, why am I so bullish about something like CAMS? Because first and foremost, if you take a look at the sales have been constantly going up, absolutely constantly going up. Now, CAMS is a back-end provider for mutual funds. Now, as and when asset management companies grow, their business picks up, automatically CAMS is going to make money. Is this forever buy and hold type of a company for me? Absolutely not, because I truly believe that AMC companies are going to figure out a better method to manage their back-end processes, and they might not pay CAMS that high a split. So from that perspective, I feel that CAMS is a good business right now because it is available at an attractive price. Therefore, I'm buying it. But am I going to forever hold this stock? Absolutely not. But I definitely do see this stock coming up by 33% at least, at the very least. Two other businesses that I purchased today, one was Nam India and one was Aditya Birla Sun Life AMC. So Aditya Birla Sun Life AMC recently launched its IPO, right? So it's a fairly fresh business that has been listed. Why have I purchased these two? Have I lost conviction on HDFC AMC? Absolutely not, right? So I have not lost even one bit of conviction on HDFC AMC. I still feel that is the best AMC business out there to be purchased. I am at a loss of approximately 6.5% notional loss sitting on HDFC AMC. But I'm maxed out, so I don't want to invest any more money on it because I've already taken big bets on HDFC AMC. But overall AMC business, I'm quite bullish. So I've started to diversify my AMC positions across different companies. So according to me, both Nam India and Aditya Birla Sun Life are available at a decent price point. So I've started taking initial positions in these stocks also. Now, as the entire AMC business grows, which I'm very, very bullish about, CAMS will grow. Aditya Birla AMC will grow. NAM will grow. HDFC AMC will also grow. Now, there is a one side point that I would like to mention, that there is always this NIFTY management that is done. What is meant by NIFTY management? NIFTY management simply means that big sharks in the market, they want to keep Nifty in a certain range. For example, it could be 17,500 to 18,300, right? So that's the range in which they are moving. HDFC Group hasn't moved much, right? It has only come down for the last couple of months. I'm a big investor in the HDFC Group, but at some point when the Nifty has to be taken up, they have to move the entire HDFC Group. And I see all the stocks of HDFC going up, right? Whether it's HDFC AMC, whether it's HDFC Bank, whether it's HDFC itself, whether it's HDFC Life Insurance, all these companies will move up. They will give a very quick move. If you don't believe me, look at the story of JP Power. A lot of you were commenting that, hey Akshat, you know what, we lost like all our money on JP Power. No, in the last 2-3 days itself, it has given an uprise of approximately 30% now. Now, please don't blame me, right? If you don't sell it and never end up making money, it has already given massive profits since I had made that video. Now, I'm not saying that you should go and invest all your money in your AMC business. You should be diversified. For example, I have extreme conviction in HDFC AMC. I feel that it will come back up quite aggressively, but you know, sometimes what happens is that the market conditions are not right. A lot of peripheral things happen. So the stock is not moving for some reason. It is deliberately kept low. But once it starts giving a rise, there is no stopping it. So keep that in mind, that within a day's time also, a stock can come up by 20%. That happens very, very frequently. Important point again, where I started the video, that please have conviction in the things that you are buying. If you don't have conviction to buy in red, you will never end up making profit. As retail investors, one of the biggest mistakes that we make is that we end up chasing a stock when it is going up. That is the worst thing that you can do, because you are probably buying an overinflated stock at that point in time. You should have conviction in stocks that you are buying, only then you will make money. Okay, so what are two final things or two final stocks I'll be purchasing tomorrow? Most likely, I'm going to buy, number one, NGL Fine Chemicals. That is one stock I'm bullish about. It has corrected a little bit, 5-6%, but again, see this in context of the other pharma stocks that have corrected. Even Divi's Lab has corrected by so much, right, compared to NGL Fine Chemical. There is nothing wrong with NGL Fine Chemicals. Number two stock that I'm going to purchase is Whirlpool, because the stock has corrected quite a bit. So I'm quite bullish about it, that it will come back up quite aggressively. It's a good company. It's a good profit making, revenue making company with good ROCE in place. Durables are getting hit a little bit again due to high inflation, but honestly, it has an inelastic demand. You will not stop buying washing machines, or you will not stop buying ACs, and you will not stop buying fridges. So it's only a matter of time that the fundamentals of the business will catch up. So these two stocks are my pick for tomorrow, because many a times you guys say that, hey Akshat, you know what, you pump up the stock, then you sell it, this, that. I cannot do that. I'm not that big a shark. And I'm telling you in advance, what am I going to do tomorrow? So I hope you enjoyed the video. Do check the links in the description box regarding the small case investing. It will help you understand a lot about thematic investments. And I will see you the next time. Please give it a thumbs up. It would mean a lot to me.